as me.
Welcome Home Radio Podcast. Are you looking to buy or sell your home? Our team is here with answers to guide you through the buying and selling process. We encourage you to ask questions. Please comment on this show or visit us at welcomehomeradio.net for more information. Bringing real estate, lending, and education together in one place, and to help you make the right home decision for you and your family.
And welcome to Welcome Home Radio, where real estate lending and learning come together. It is December 10th, and we're so excited. Merry Christmas to everyone out there. I hope you get to spend it with family and friends that you look forward to this season. And then, of course, New Year's right behind. Had a great Thanksgiving, gentlemen, but Merry Christmas to you both. I hope you got enough money to survive the present season of purchasing.
Never.
It's never enough, is it? Well, we are still in the series of Your Turn to Ask. This has been tremendous. Great questions coming in. Please find us at welcomehomeradio.net, where you can ask us your questions. We want to try to get to them as soon as possible. But the bottom line is our market is a very interesting time. And with potential rate cut today, that could be coming later today. We want to get to some questions that people are asking about the future of the real estate market. So any comments before we get started, gentlemen?
Great to see you guys. Merry Christmas.
Have you finished all your shopping? That's the big question.
I don't do mine until
Started your shopping.
evening of the 24th. Come on, you know that.
I like to see who's in the mall on that day.
Exactly. It's always fun. Okay. Welcome Home Radio. Are assumable loans really going to happen? What a great question to ask. I'm going to first say assumable loans are already here. They are possible. And what is an assumable? I want to try to give it, and then Tom, you can answer it a little bit further. But assumable mortgages means the buyer takes over the seller's existing loan, including interest rate, the remaining balance, and the remaining terms. But it also assumes an equity transfer of cash because nobody's going to sell their home just for the loan value. So assumables are in FHA, VA, and USDA. Conventional loans are not assumable, mostly because of due on sale clauses and so forth. So given today's rates, assumable mortgage is a possible option, but you also have to understand assumable mortgages take longer than normal mortgages. They're generally going to be between 50 and 75 days because that mortgage company has to go through their process with that new buyer in assuming. And you also have to have a caveat of cash to give to the seller because you're going to pay a difference. If they have a large equity stance, then more cash has to come to the table. If it's a less equity stance, it's less cash to the table, but there still is a difference. Nobody's going to sell just for the mortgage value that they have on the home. Gentlemen, what else do you want to add to something like that?
Well, I'd be curious to hear if Mark has done an assumption at his title company in the last year or.
I haven't seen one in the last 6 months at least. What
Did
we
you mean
do,
Jeff, not Mark?
I'm sorry, Jeff. I don't know why.
Mark's the producer. He's the important guy. That's why.
Trying to figure out who is.
Mark is our producer. I knew
I
exactly
want
what he was
Mark's
thinking.
opinion. He's always so quiet.
When he started the question, I thought he was going to say, "Have you done one where your new location is?" That's what I was thinking he would say.
Everybody's guessing what I'm trying to say, and even I'm trying to guess what I'm trying to say.
Ladies and gentlemen, I'm just going to say it. It sucks getting old. It just sucks. I mean,
My brother Mark is living with us, and I was wondering if he was going to hear the show because he's in the next room adjacent to us.
Jeff, have you done an assumable loan lately?
I have not. What we have ran into though is there's lots of people doing what's referred to old school wraps, and that's not a good way to go about it. That's just there's risk, there's reward, but there is risk there as well. And they're not asking for a new policy from us. So as a title company, we're not closing those unless they're going to obtain a new policy. And that's pretty much across the board. But we just haven't seen any lately. Everybody's talking about it. But for one, less people are going to put those on the market, it seems lately. And otherwise, how do you go find those assumables to even put an offer, even if it's not on the market? You know what I'm saying?
Well, I think every realtor I know that thinks they sell on, hey, you got a great interest rate, let's do an assumable offer and we'll get a lot of business. It's not true. I just don't believe it's true once buyers understand what it has to go through and what it may take. If you've been in your home as long as me, let's say 20 years, nobody's going to come with that much money, cash. They're not going to have it. And the bottom line is it's either FHA, VA, or USDA. So one's geographically limiting. Another one is limited to the person's service, whether they served or not. So FHA becomes the only generic FHA assumable loan out there. And that's not always a good one to go through with an appraisal value, because you still go through all of that. So I don't see, and yes, they are happening. Thank you for asking the question. They are available, but there are so many sticking points. And especially, Tom, tell us about the secondary market. Do they like these?
Well, I will tell you, the investor, and this has been my experience of asking people about this, the only reason why people are generally interested in assuming a loan is the first lien. The first lien is one of those from 3 and 4 years ago that's at 2 3/4, 3.5%. And the investor doesn't like that, but they are mandated because they did use a government loan to abide by the requirement that they're assumable if, again, the seller wants to be able to make their loan assumable. The caveat, of course, is that they have to go through the approval process, which, like you pointed out, takes longer than a normal get a new loan situation. So you've got to have a seller willing to do it. Well, the sellers are willing to do it only if they're getting additional equity positions, which is also one of the advantages to a seller. So a good real estate agent should present this to their sellers on a listing situation. But out of the other side of my mouth, is it something the investment or the secondary market likes? Not necessarily, but they're also a little bit more likely to do an assumption than they are to do a new loan for somebody, because typically, like you mentioned earlier, there's a larger equity position that the buyer has to come into the purchase with. And that higher equity position gives the investor more security and more confidence that the person will continue to pay the loan, even at a lower rate, because the higher equity position gave them a better deal than the 3.5% down that originally, or 0% down that was originally there to get the ongoing loan that's sitting there.
Well, let's drop the final caveat that I think most people do not understand, and correct me if I'm wrong, and so often that is. But
So should I do that right now?
yes, you should. VA as the seller, you never lose the responsibility of that loan, even though you're being paid the money and that person's assuming it. You never learn or lose the caveat of, hey, I no longer have this financial.
So you're a co-signer.
You're really becoming a co-signer. Is that true with FHA and USDA like it is with VA?
Well, there's a 5-year caveat with that to be actually as I understand it. So the caveat is that if you're paying on it for 5 years, the government will then release you after the 5th year, after 60 payments.
And so that's what I try to say. Unless I'm doing this for my children, taking on my mortgage at a home, who am I going to trust for a minimum of 5 years, 60, where a normal person just stays in their first home 3 to 7 years at the most? The bottom line of it here, the risk never goes away, even though somebody's assuming your mortgage. What is this?
Your BFF, Tom, I'm just about to tell you. That's who you trust. Who would I trust? Me.
Oh, please.
I mean, look at this face. Look at this face.
Oh, put it back on, please. Oh, gosh.
What was that you said a minute ago? Lord, it's hard to be humble, isn't it?
It is. It's so hard. The challenge here that I think most people need to understand, assumables take a long time, as well as there's still risk after closing that you maintain as a seller. It may look on the surface to be a wonderful deal, but please investigate every opportunity, whether FHA, USDA, or VA. What are all the caveats? What are all the things that you have to do? Because you can't take out a second loan to help pay for that cash that is necessary to come to closing with. So be aware. I hope we've answered your question. We thank you so much. Our next one kind of falls in line with this. I think people are really looking forward to this spring season of buying here. Welcome Home Radio. I have a 3% rate. Is a portable loan available in the near future? Now, I've heard about these. I've heard them talk about it. I am thrilled that the administration is trying to get the housing industry off a dime and start moving a little bit. But portable mortgages, from what I understand, they are not a standard, and the secondary market, Fannie, Freddie, Ginnie, VA, all of them, they're not designed or set up for underwriting of a portable mortgage to go. What an idea.
I think before you start down this path, though, you probably need to clarify what that terminology means for our listeners.
You take it with you. You take your interest rate and type loan with you to buy your next home, and as you sell your other one, you keep that rate. That everybody's wanting to talk about rate, and it frustrates me to no end. That rate is the number one thing instead of where I think it ought to be around 14, 15 on a mortgage priority. They're making it the number one thing, and they're not standard here. Are they standard anywhere else, Tom, Jeff? I mean, is this portable done in other countries? Because
I'm not very familiar with them at all. Because the thing that pops in my mind, how can you just say, okay, we're going to let you get a 3% rate when you buy this new house? Well, it's a larger home. What's your debt to ratio income? How much of that has changed? You're going to have to get pre-approved. You're going to be reapproved, are you not?
Yeah, what's your credit?
It's a lot of what has changed since you bought the house you're in with that 3%. They're going to put some, if they're there, I'm not familiar with them, but if they're there, they're going to put some heavy stipulations on them, is my guess.
And a portable mortgage, you're trying to transport your interest rate, your loan to another house or home and assume. I just don't see how this is ever going to pass. It is not available, and it's at least between 12 and 24 months out, if it's even going to happen.
And unfortunately for the consumers, I think these are ideas that the feds are working on, thinking about, and going through. And this isn't the only one we know, because we hear other rumors, but it gets out in the public. And now people, just like the rates, they're going to say, well, I'm just going to wait till this gets passed, and we're going to do that in 6 weeks. Well, that's unfortunately for the public and consumers, that's what happens so often. And these were just throwing things against the wall. We want to help the American people. We want to help make things better, but it has no sense that, or means nothing in all that you hear about it that it's going to take place. That's for sure.
Can I remind our audience of one thing that is interesting to me that most people don't know? Is the rest of the world, I mean, every other country in the world only has ARMs. There is no fixed 30-year fixed opportunity for them. They only work on ARM loans. So every 3 or 5 or 7 years, their rate is changing with what the market is. So understand, America has a very unique situation here. 30-year fixed is a standard that has helped many people buy homes. I understand wanting it to be portable. I understand taking that rate with you would be that'd be great. That 2.5 would be just, oh, we could buy such a larger house now or whatever. But the bottom line, the finances behind it and the secondary market are not, they don't see the light at the end of the tunnel. If anything, it's a train and a train wreck coming, or 2008 train, should I say, coming, if that's going to happen. I mean, Tom, would you agree with that, or how would you change it?
Well, there are two things that exist. One is that
Be careful.
nearly the wrong finger there. Thank you. Much better. Much better. But the first thing that I'd point out is that, again, the public gets exposed to a lot of things like the 75-year mortgage or whatever they came up with, 50-year mortgage.
Quit reading ahead. That's our next question.
The 1,000-year mortgage. And so all the hypes, the stuff you're addressing are plans or things that, HUD talks about, and they talk about it with Fannie Mae, and then Fannie Mae comes back and says, where are you going to sell these? We're not going to buy them, so on and so forth. So we really have to
talk to Freddie.
Yeah.
Then they go talk to Cousin Jenny.
And then talk to Cousin Fanny. So they're all trying to get a grasp on what might make housing more affordable, and that's kind of the lip service that's being paid, whereas the reality of some of these ideas get really out of scope with what is the realistically what a market can bear. And we've already seen the market back in 2006, 7, and 8 bearing types of products that it could not support and the consumer could not support.
Let's remind people what happened then. If you could breathe on a mirror and it would fog, you could have a loan. That's what happened back in 2006 through 2008.
Exactly.
Mm-hmm.
So that's a big thought process as far as that goes with regards to what we're talking about, portable type loans that are out there. So they come into existence.
So I guess I want to say they're not a standard yet. Buyers should not rely or wait on that being available anytime soon. It is something that regulators and lenders are discussing, but there is no traction as of yet that we are aware of that come into even 24 months time frame for the market. So please don't be waiting on that. That is still mostly theoretical. Agree? Okay.
Absolutely.
WHR, I am looking to buy, and thank you. I'm glad people are out there, but is a 50-year mortgage going to be real shortly? Now, you just brought it up, talking about 50-year mortgages. They're just trying to stimulate the market. And so therefore taking a 30-year, turn it into 50 years, making the DTI shrink a little bit. And again, you got to understand residential mortgages are interest heavy in the front. So you're going to be paying more on interest in these. And it's a lifetime. I mean, it's a lifetime loan. But we have to understand nobody stays in their first home for 3 to 7 years. You never pay off a mortgage. It's very rare until about your third or fourth home, and you're ready to pay it off as soon as you can. So getting people into the market is the hope. They're discussing it. 50 years to traditional 30-year. All they're doing is extending out so that the payments shrink and debt to income can work. Is that a true statement, or is there something else here I'm missing?
I think whoever asked you that question should call you and let you run the numbers for them. I don't think it's as pretty. If it's happening and people are going to take those, I don't think it's going to help them as much as they think especially up in the front half. You tell me. I just don't think the numbers. I messed with it a little bit. And
I don't know of a single secondary market buyer wanting to go into a 50-year mortgage. They're adapting to 50-year, but 50-year is too long a time frame. The risk, I think, is going to be larger, not smaller. Tom, what do you think?
Well, 50-year mortgage for me right now would be great.
You're leaving it
because I know I'm going to be living to be 130, so there's no problem there.
Really?
Wow.
My wife's actuary table say I'm going to die next week. I mean,
is she taking out extra insurance? Just that makes
already done that 10 times over. I am worth more dead than alive. So
there you go. That's what we like to hear.
One eye open.
But the 40-year notes that do exist in our marketplace, keep this in mind. The 40-year note, typically, if it's an A type of borrower, still going to pay 1/4 to 3/8% in a higher interest rate over 40 years than they would over 30 years because the length of the mortgage is an increased risk. So to sell that mortgage, you're going to have a higher interest rate, and the total interest that you end up paying because of the higher interest rate and the extended period of time is about 25% more for 10 years being added to the loan.
Wow.
That's why I said call one of you guys and look at those numbers.
It just, I'm beside myself when I talk about products like this, because if you're a 25-year-old person getting a 40-year mortgage, that means what would be the last time you pay it, what the last payments you have when you turn 65. I mean, that's after you're still getting Social Security, if it's still there. I'm going to spend all that money right now, baby.
Thanks.
I tell my kids,
that's why reverse mortgages came around. I mean, Tom, right here. I guess I would want to watch this more, as well as, like you talked to saying, run the numbers. The cost, I think, is the risk factors taken in is definitely opposite of what they think it's going to do, and that's why they're still analyzing it, trying to figure out how it can work. Or government backed, it doesn't make any sense. I see it as a big challenge for the secondary market to accept a product like this. Now, non-QM, if there's certain books of business, I see some private companies doing something like this, but they're going to charge you out the wazoo for it. I mean, they're still going to be in the double digits interest for it. So now, and the problem I have is I work mostly in construction, building custom homes. I don't see a 50-year one-time closed construction solution coming anytime soon, as well as assumable. So rather interesting.
So good questions, though.
All good questions. I do want to add in a slight thing. Did y'all get my weekly update about the loan limits for New Year? That's a pretty big jump, Tom, from the past years.
Yeah, and I'm sorry I haven't had a chance to read it yet.
Oh, my.
See how I segue and act ignorant so you can tell me?
Take the knife out.
At least you're good looking, though.
Usually I do. Usually I am always on top of that.
Uh-huh. Yeah, right.
It's the holidays, and he has visitors, so there you go.
That's right. I'm still recovering from the Thanksgiving period.
Oh, really? Tell us about your Thanksgiving.
Oh, God.
What a setup.
Not going to work. What's the new loan limit?
Oh, you would ask me that. I don't have it off the top of my head.
Oh, see, you don't even read your own stuff. That's probably some AI generated thing type.
Oh, whatever.
Yeah.
Give me a break.
You know,
See
I
if I can
had
pull that
something.
up.
836, 750, if I remember correctly.
Yikes. I could believe that.
836, 750. And that means VA is the same amount.
Wow.
FHA, I mean, my goodness, I've been in this industry too long. I remember when, you know, the max loan limit was in the sixes. So, and what does this mean when they say loan limit?
That makes FHA 543,887. Over $500,000 loan now FHA will give you the program's designed typically for first-time home buyers. More than $500,000.
And they don't use that in California because every home's $1 million or more.
Right. They use the
Well,
higher
and
loan
that's-
limit.
they really don't have a choice with the way the market's been.
Yeah, FHA's been over $1 million now for a couple of years.
Wow. Well, again, Merry Christmas. Enjoy your holiday season. Get out and see some lights, spend time with family and friends. But understand the market is they are trying to bring it back. We look for a strong spring. And later today, we'll find out if interest rates are going to be cut again. God bless. Merry Christmas. I'm Blair Thomas.
I'm Tom Holm, I think.
And I'm Jeff Duffy.
Amen. Clear to close. That's where we want to get you. Bye-bye.
Welcome Home Radio production provided by Lunatic Digital. Check the listing of this podcast for the links to our sponsors. And don't forget to like, share, and follow us on social media. Visit welcomehomeradio.net for more information. This was a Lunatic Digital production. Visit lunaticdigital.com for all your digital needs.